Hello, welcome to the Boston Income Fund quarterly report for June 2025. My name is Paul Jones and I am the fund manager of the Boston Income Fund. The Boston Income Fund, which is also known as the BIF, continues with its record of delivering sustained and repeated quarterly income returns, which your investment committee believes are among the highest risk-adjusted returns that are currently available. For the June 2025 quarter, the BIF has generated a return of 3.0886%, which equates to an annualized return of 12.3883% net of fees. And I would like BIF investors to know that income distributions for the June 2025 quarter will be paid or allocated to your BIF unit holdings if you've elected to have distributions reinvested in full during the third week of July. The published 30-day bank bill swap rate, which is often referred to by the acronym of BBSW30, is a money market interest rate that is significantly influenced by the official cash rate that is set by the Reserve Bank of Australia. By adding a margin to this benchmark rate, Boston Managed Investments can provide BIF investors with an annualized return that accurately reflects current levels of market risk and macroeconomic policy conditions. And as of 30 June 2025, the BBSW30 rate stood at 3.6125%. The BIF's June 2025 return again showcases the fund's consistent success since it was launched over a decade ago in 2013. And current conditions indicate that there will be a continuation of this reliable operation with ongoing quarterly income returns paid to investors. In alignment with our ongoing commitment to always keep communication with our investors clear and open, Boston Managed Investments CEO Darren Harrison will reach out to all BIF investors during the second half of July 2025, or immediately following the release of this report. If you do happen to have an urgent question though about the BIF, or you have any specific concerns that you would like to raise with us, please do not hesitate to contact our office for a prompt response. You can call Daniel, Alice or myself on 02 8920 8886 and we will be very happy to speak with you. Thinktank Group Proprietary Limited, which is known commercially by the name of Thinktank, is the mortgage origination platform in which Boston Managed Investments primarily invests. And over the reporting period, the company continues to exhibit robust growth while still maintaining its stringent credit standards. As of June 2025, Thinktank manages $7.3 billion in loans across 11,941 loan accounts, and the loan portfolio is able to report a weighted average loan-to-value ratio, or LVR, of 66.2%, which is symbolic of a reasonably conservative lending culture. Boston Managed Investments routinely assesses the key parameters of the Thinktank loan portfolio. These reviews provide insights into performance trends and ensure that the loan portfolio remains aligned with our investor return objectives and complies with all operational covenants. Crucial portfolio characteristics, such as loan size and loan-to-value ratios, exhibit a normally distributed profile, which supports diversification and reduces the risk of concentrations. BMIL's structured and disciplined approach to portfolio assessment allows for the prompt identification of portfolio misalignment, and our team has identified that individual loans in the Thinktank portfolio align well with standard expectations regarding the average values of Australian property prices and the earning capacity of the average targeted borrower, which in the case of Thinktank are primarily self-employed borrowers or self-managed superannuation funds. Based on the portfolio's average loan size of around $611,000, BMIL has confirmed that 85% of all loans fall within a range of $120,000 to $101.1 million, a range that is consistent with domestic property values and borrower profiles. The dominance of lower loan balances can typically be associated with lower leverage, higher quality borrowers, which reduces credit risk in the portfolio and improves operational efficiency for Thinktank. The portfolio's current weighted average LVR of 66.2% has the majority of loans also clustering within a close range of that LVR value. Within the complete portfolio, individual loans are weighted more towards the lower end of the LVR range. This is a conservative point of positioning that provides further risk mitigation for Thinktank and its investors. As of 30 June 2025, Thinktank loan arrears stood at just 2.72%, which is significantly below the modelled forecast and well below the broader market, where comparable portfolios are showing arrears nearer to 4%. These results highlight Thinktank's disciplined credit selection and strong arrears management capabilities, which reinforces BMIL's confidence in the resilience and quality of the Thinktank portfolio. This concludes our video report about our strategic investment allocations, and I would like to thank you for your support and for taking the time to watch another of our video presentations.